Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. It's getting toward the end of the day, so I'm going to do a quick look at some of the major currency pairs versus the US dollar. Looking at the euro versus US dollar, the low to high trading range today is only 51 pips. That's not a lot. The average is at around 78 pips. And the buyers had their, the sellers had their shot, and the buyers had their shot as well. What do I mean by that? Well, if we take a look at the lows for today, what did we do? We fell below the 100-day moving average. That's the upward sloping blue line right here. That's an overlay on the hourly chart. We not only fell below it once, but we fell below it twice right here. First one by about 4 or 5 pips, the second one by about 2 pips. And each of the time the price traded below those levels, what did we do? We found buyers and the price moved back to the upside. So the sellers had their shot, they missed, and the buyers took over. On the top side, where did the price go? And if we take a look at the high price from late yesterday in the New York session, the high price that we saw in the early New York, late London morning session, they equaled around the 1.0956 level, and then we broke above that level, reaching a new high for the day. But guess what? The price couldn't extend any higher, and what did we do? We started to find sellers against that high. So we found we broke below the 100-day moving average, couldn't capitalize on that. Broke above the highs, recent highs. Couldn't capitalize on that and move toward the 100-hour moving average. So we're in between those two levels in the new trading day. We got to get above the 56 level and stay above that level. If we're able to do that, we'll look toward the 100-hour moving average where we last tested it here, and here, only to find the price seller or the sellers lean against that area or near that area and push the price to the downside. We need to get above the 100-hour moving average, and then the 200-hour moving average at 1.104314. It is moving down. If we're able to do that, the bias is more to the upside for this pair. Until then, however, if the price stays below these levels and we start to move back below the 100-day moving average, that's the blue line here at 1.09164, we'll look toward this swing area down here between 1.0886 and 1.0899. Move below that level, and we'll start to look toward the July lows, which come in at 1.0832. So the levels are set, 100-hour moving average above with the 56 level in between, the 100-day moving average below, with the swing level down below that as the next key target. Let's take a look at the dollar versus yen. And in this currency pair, we did see the pair move below the 100-hour moving average in the New York session, but we did find support against the old 61.8% retracement of the move down from this high going back to the end of June to the low price that we saw in the month of July, and found support buyers against that level. It also is near this swing area here, where we have a number of different swing lows and highs. Outline them out here with the arrows here. Different. It was initially support, and then it became resistance through here, and resistance here, and then it became support through here, and we returned back to that level. And what do? We found support buyers. We are trading right near the 100-hour moving average as we look to the end of the day, and that level is going to be our barometer for bullish or bearish. If we trade above it, we're going to look toward this area up through here, and then ahead of the break area up through here. Remember, this area was also defined by levels going back to here. So it held resistance, broke above it, failed today, and then rotated to the downside. So we need to get above the 143.44 to 54 level. If you're able to do that, look up toward this high right there, and then the swing area between 144.12 and 22. On the downside, if we hold and move below the 100-hour moving average, we've got to get below this swing area between 141.84 and 142.07. If we do that, then we're going to look toward the 200-hour moving average. That's this green line at chart at 141.56. Let's take a look at the sterling versus US dollar, and then I'm going to look at the 4-hour chart for this currency pair. Why? Because the low price in trading here today, I did find support buyers against an old swing area going back in time here. This is each of these dotted lines represented weeks of trading, and you can see how going back here we had support, resistance, and then support. Over here we found support near this area right through here before moving to the upside, and we returned back to the high of that area right through here, and also short of the 100-day moving average down below, and we saw the price back up, and on the move back to the upside is taking the price above this swing area between 126.81 and 126.98. Let's call it 127, and that's about where the price is currently trading right now, or at the 127 level. If we break below 126.81, we'll look for a rotation further to the downside. But if we find support buyers against this level, we'll look for a rotation to the upside with this swing area between 127.38 and 127.59, and 38.2% retracement at 127.63 as the next key target. That also was the low price from last week's trading, so be aware of that. Get above that level and we'll start to look toward the 50% of this last move to the downside and the 200 bar moving average on the 4-hour chart as other targets in that directional bias. Finally, let's take a look at the dollar versus Swiss franc. We saw this pair move higher. We saw a weaker CPI data come out of Switzerland today, but the price fell short of this high, even though the price moved above the 50% retracement of the move down from this swing high going back to the end of June to the low price that we saw in July. The failure to get and stay above the 50% retracement and the sellers against that 50% retracement right here turned the buyers to sellers, and that momentum took the price to the 100-hour moving average. But we could not, and then broke below the 100-hour moving average, but could not get to the 38.2% retracement, the broken 38.2% retracement at 127.29. As you can see, we started to rotate back to the upside. So in the new trading day, we need to get below these levels in order to increase the bearish bias for this currency pair. If it's able to do that, we'll look toward the 200-hour moving average. It's a green line in the chart. Absent that, and right now the buyers are more in control, we'll look toward the 50% retracement once again. If we get above that and stay above that level, then we'll have traders targeting this level up here, followed by the 61.8% retracement on the top side. So there you go. Look at some of the major currency pairs as we head into the new trading day. My name is Greg McGlosky. Good fortune with your trading. Bye-bye now.